Greetings. Welcome to my weekend market recap, 30th July 2022. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for my trading. All of them run on Metastock platform and the technical analysis part runs also on TradeStation platform. These are the different components. That was the last slide. Let's continue with the live system. First a look at the global market starting with Australian All Ordinaries. All Ordinaries has broken above the weekly trendline resistance, that is bullish. The backdrop color is also bullish in weekly chart, shape is bullish. In daily, after the bullish headwind, it displayed a series of bullish flow candles. You could take a long position at that time, and when price hit the upper boundary, you could book partial profit. In the previous roundup, I mentioned that because price was near the trendline resistance in weekly and there was a trendline resistance in daily also at that time, I mentioned that if price could tilt down from the two trendline resistances, that would give a low risk shorting opportunity. However, price did not turn down. It did not give any Q short setup. Therefore, Q traders would not take any short trade. On Thursday, it broke out of the narrow sidewise range. Looking at that, you could look for breakout long trade setups in individual stocks on Thursday. It is bullish now, however, a little bit extended to the upside for my liking to take new long trades. One way to look that extended nature, see the extended nature is from the Q stretch indicator that is already overbought for many days. All Ordinaries is bullish. What about Japan's Topix index? Topix index is continuing to move in a range created by trendline resistance and support in the weekly chart. It is near trendline resistance in the daily. It did tilt down on Friday and displayed a bear release signal. In the previous recap, when I discussed topics, I mentioned the same thing as was in the case of All Ordinaries, that if price could tilt down from the daily and weekly trendline resistances, we could look for short setups. On Friday, the tilting down has happened with a bear release signal. However, the candle has a small lower tail. Another reason not to short is because the ascending trend line is very close to Friday's low. Doesn't give us enough distance to the downside to take a short trade that has attractive reward risk ratio. Therefore, I will avoid shorting in topics right now. It has one trend line support and then another trend line support nearby. Yellow line and white lines are also nearby. I'll not short and I'll not take long unless this trend line resistance can be broken in daily, at which point the trend line resistance in weekly will also be broken. For short-term trading purposes, we can say that topics is moving sideways inside a triangle. So Australia bullish, Japan sideways, China market CSI 300. Let's look back again. In the previous recap, price was near this trend line support, and I mentioned exactly this, that if the trend line support is broken, I look for shorts. If the price bounced up from the trend line support, I would look for long. For the first 4 days of the week, price did not go anywhere, and on Friday price broke below the trend line support, and it also displayed a bearish flow. Weekly is continuing with bearish color. Therefore, on Friday, as I already was ready with, I could short individual weak fundamental stocks. For short-term trading, China market is bearish. So far, we have a mixed picture. Australia bullish, Japan sideways, China bearish. What about Nifty 50 India? In the last market roundup, we were at this point. Price was already up significantly from the previous swing low, and I mentioned I was not going to buy at this point. That was Friday 1 week ago. Then we had a bearish headwind, a bear release. The overbought condition went away, and immediately after that on Wednesday we had a bullish shape candle, and the bullish shape candle went up beautifully from the white direction line. It in fact went above all the 5 direction lines: 1, 2, 3, 4, 5. That created a swing low, higher high, and on that day I had a webinar with one Indian trader. I mentioned that I turned bullish again. That was effective because Thursday, Friday price went up sharply. And what I told in the previous roundup, I'll repeat the same thing again. India market is bullish but already overbought again, far away from the recent swing low. So I will avoid taking new long trades. And that is the essence of my swing trading. I always buy at swing lows with bullish signals and start booking profit when it becomes extended. India market bullish, extended, and lastly FTSE index UK market. In the previous roundup, we were here and looking at the multiple upper and lower tail candles. I mentioned it was indecisive. I was not going to take any directional trade. After that, price has gone up. However, I see we have two bearish indecision at the low candles. In fact, a series of them coming one after another. Therefore, though Friday's candle is bullish in shape and color, and weekly candle is also bullish in shape and color, looking at these so many bearish indecision at the high, I will be cautious about taking long trades. In the master classes, I mentioned that if one bearish indecision or bullish indecision comes, we are careful, and when series of them come together, then we are extra careful. Therefore, I may pass the opportunity to buy in the UK market. That completes the individual global market study. We see majority of them are bullish now. Only China market is bearish, Japanese market sideways. And if we look at the global index as a whole, global index has also turned bullish. It was moving sideways for a while, then Thursday, Friday it went up. With respect to the USA market, S&P 500, we can see it is equal performing and maybe starting to underperform. Global market as a whole is bullish, underperforming the USA market but still bullish. Now let's look at the USA market. By the way, you might have noticed how nicely I have set up everything in the custom menu bar of Metastock. I have put all the Metastock functionalities, and not only that, I have also put my icon launcher here, my brokerage platforms for India and USA markets, and the Q types programs like Edge, Finder, etc. Because I have set everything up in the custom menu bar, what I do every day, I open Metastock first and then launch everything from Metastock. Metastock has become not only the charting and scanning platform, but also the launching platform for all my trading needs. Let's look at the USA markets now. Okay, for USA market, why don't we use TradeStation? Use the same weekly, daily at a glance template, starting with S&P 500 ETF SPY. SPY moved somewhat similar to the Indian market, or you may say the opposite. India market moved somewhat similar to USA market. Of course, India market closes before USA market opens. On Wednesday, SPY regained the yellow direction line and then went up Thursday, Friday sharply. Wednesday also gave a bullish flow. So you could start looking for trend following long trades on Wednesday. Now looking back, what was my analysis in the previous market recap? Previous market recap, we were here and I mentioned that I was not going to buy new stocks because it hit the yellow direction line and slightly tilted down, closed below the yellow direction line. The other market ETFs, I think they gave yellow candle in the daily but did not close below the yellow direction line. So I did not take any long trades at the close of Friday. I in fact shared one short idea, that was fuel cell, F cell. First 2 days of the week price came down, but Wednesday it turned bullish. And if you notice my Twitter posts and my website posts, from Wednesday onwards I shared some bullish ideas, multiple of them. If I remember and if I have time, I will review some of those posts that I shared. Some I shared publicly, some I shared with individual traders when I had a chance to talk with them. I'll come back to those ideas. I'll also share some bullish ideas as of Friday's close, though the market is extended. The daily SPY chart is overbought. I am not going to buy SPY now. The recent low is far away. It is certainly bullish but overbought. QQQ, very similar picture. We were here in the previous market recap. It had a yellow candle bear release signal but did not close below the yellow direction line. Still, I was not bullish at that time. For the first 2 days, price came down. On Wednesday, price regained the yellow direction line, displayed the bullish flow. Then Wednesday, Thursday, Friday, price went up. If you notice, Wednesday displayed the big move up 3 after hitting jump thrust low at price extreme low. And as I have mentioned many times, when we have price jumping downward at a level where it is extremely low already, and then we have big move up 3, more often than not, most often that gives rise to a profitable swing trade in the long direction. And the same case we had in QQQ. When you saw this big move up 3 after hitting jump thrust low at price extreme low, you could confidently buy individual fundamentally strong stocks on Wednesday. And that is when I started sharing some bullish ideas. I have booked profit in most of them. In fact, the ones that I initiated starting from Wednesday, I booked profit in all of them. I tweeted about that. And near the market close on Friday, I used the real-time analytics to find some buy candidates and I took some positions in a few stocks. However, the trades I initiated on Wednesday, they already had some profit and they were not near swing low anymore, and I booked profit in all of them. QQQ bullish but too extended for me to take a new long trade. Dia, same picture. We were here last weekend. I was not bullish. Price came down for first 2 days. Then on Wednesday, once again, we had a bullish flow. Price regained the yellow direction line. We could buy stocks and we could book profit by Friday's close. And IWM, small cap ETF, same picture. Regained the yellow direction line with bullish flow on Wednesday, Thursday, Friday, it went up. Now notice in this week, this last 5 days, only QQQ gave big move up 3. And that came on Wednesday. On Wednesday, all the market ETFs went up, but big move up 3 came in QQQ. Looking at that, which kind of stocks would you prefer to buy on Wednesday? That would be large cap tech stocks. And I think they outperformed the market. We'll look at market breadth total view shortly. IWM is also now overbought. Already 3 days up from the swing low. I'm not going to buy IWM now. And another reason not to buy IWM or small cap stocks maybe is because the weekly has a trend line resistance nearby. That is not a place where I like to buy an instrument. The USA market from the market ETFs is looking bullish but extended. Now let's look at the very useful market breadth total view. Remember, I think all the market ETFs displayed a bullish flow on Wednesday, and in the market breadth total view, we have a bullish accumulation count and one Eureka day on Wednesday. So market ETF showed bullish trend beginning again on Wednesday, and market breadth total view showed that under the hood the market was bullish, very healthily bullish, and we could again buy stocks on Wednesday. Then price has gone up. The 3-month new high-low line shows overbought condition when it hits the upper limits shown by these two horizontal levels at the upper end. It is approaching that level. Has not hit that level yet, but approaching that level, that's a reason to be cautious. Now notice the very useful percentage of stocks above 50-day moving average that turned into an uptrend here itself. And if you remember, now let's go back. I turned bullish right here. Even though market came down for some days, I did not turn bearish. All my sharings were bullish and I continued to be bullish here. I closed my long positions here. Then on Wednesday, I initiated long positions again. When I closed my long positions at this point, price came down little bit, and during this period only one short idea I shared publicly, and I mentioned I took a trade in that stock. I exited it with a very small profit. If we have time, we'll review that stock, fuel cell. But now look back and see how this yellow line, percentage of stocks above 50 MA, pre-informed us about a possible up move in the market, and that is what is expected. If you watch or rewatch the market breadth masterclass videos, there are multiple videos, one was not enough to cover all the detail. You would know that this is the market internals, and market internals show strength, healthiness, or weakness in terms of internal health before it shows up in the external view, that is market ETFs and futures. And this is once again a living proof of that. Also, you notice that what I mentioned, that when the yellow line goes below the 20% level, that is extreme oversold condition, and when it regains the 20% level, we may start to buy from that point. So those things came together. The yellow line started to be in an uptrend, and it did cross above the oversold limit. It crossed above the oversold limit here, created a higher low, and crossed above the oversold limit, this red line again. So we could start to buy from here, and looking back, exactly that was the time when I turned bullish. From below 20%, it's in fact at 10% level. From 10% level, now the yellow line is at 70% level. That's a huge bullish move in terms of market internals. It is getting extended. The upper limit is this green line. It is approaching that green line. So we have not hit the upper limit yet in terms of yellow line. We have not hit the upper limit yet in terms of this 3-month new high low, but we are close to those upper limits, and that shows the market is extended. What else can we see? Let's look at the small cap versus large cap. We may say it is moving sideways, and if we see Last 2 3 days it is tilting down. That means large cap is doing better, and that was true for Wednesday, Thursday, Friday. Small cap did worse for last 2 3 days. Price is coming down, and that is what we saw from the market ETFs also. QQQ was the only one that gave big move up 3, not the other one. So QQQ has large cap stocks. So large cap was doing better last 2 3 days. We can see that from the market internal study here, that small cap for longer period it is equal performing. For last 2 3 days it is underperforming. What about growth versus value? Growth is starting to pick up, however not small cap growth. That means large cap growth or maybe mega cap growth is doing better last couple of days. If we consider last 5 days, 1 week, from the market breadth total view, it seems that the large cap, mega cap, value stocks are doing better, not the usual growth stocks. Getting extended. Now let's look at mega cap custom index to see how mega cap is doing. It is clearly outperforming the market shown by the relative performance. On Wednesday, mega cap custom index also displayed the bullish flow, and Wednesday, Thursday, Friday it went up with very high volume, skyscraper you may say. Mega cap custom index is also at the upper boundary, far from the recent swing low, too extended for me to take a new long position now. Now let's look at the market from some other angles, and those angles are unique to Q systems. First, using Q edge. A very useful market breadth study, but looking at the market through the angle of sectors, industries, stocks, advanced decline breadth from 1 month to 1 day. That is very bullish. So bullish that it is now overbought. And I noticed last couple of weeks when I was bullish, in fact, this is probably the third or fourth week where I have been sharing bullish trade ideas. Many other short-term traders did not think of buying, or at least did not publicly say so, not much. And now they are turning bullish, but I am looking at the market differently. Now I am thinking market is overbought. When 1 month to 1 day, everything is about 80% or more bullish. If we leave Friday's performance, all the other periods, long term, medium term, short term, are above 80. Some are 90, 100%. That is becoming overbought. And if we look at the sector performance over 1 day, 2 day, 5 day, 10 day, 1 month period, that is now very bullish. And if you now look back, not very long ago, these two bar charts were very bearish. Most of the bars were on the negative side, big size bars, negative side, and now it has flipped up. I started buying much earlier, and now when I'm looking at these two graphs, I am thinking that market is getting extended. And we are seeing that extended nature from multiple angles. Does it mean market will immediately turn around? No, I don't know that. We'll get that signal from Q when that day comes. It may be Monday, it may be Tuesday, it may not come immediately, but we'll get the signal when the market tilts down. Now it is not giving us any short setup, but it is telling to be cautious because it is extended. And if we look at the bucket analysis, let me go to my Twitter page. Twitter handle Superior Profit. On Friday, I was watching the bucket analysis, and this is when I mentioned around 2 p.m. Eastern Standard Time that I had a few long positions that I shared and took in the last 2-3 days starting from Wednesday. I had stopped buying yesterday, that is, I stopped buying from Thursday as the market was overheated, as seen from QAG's real-time bucket analysis. Today the market got more extended and I closed all my long positions with a profit. So I started buying from Wednesday, and those positions I closed on Friday. Why? Because when I shared it at 2 p.m., around 2 p.m., I saw that 87% of the S&P 1500 stocks were above the mid-Bollinger Band. That was very bullish. But even more than that, what struck me is that 47.7% of those stocks were above upper Bollinger Band. That is not only bullish, it is very overbought when 47.7% stocks are above the upper Bollinger Band. So at 2 p.m. I closed a few of the long positions that I had taken starting from Wednesday, and all of them I could close with a profit. And I followed up with a tweet just after market close. Just after market close, just after 4 p.m. Eastern Standard Time. At that time, 50% of the stocks were above upper Bollinger Band in S&P 1500, and that was a jump of about 15% from one day ago when it was around 35%. As I mentioned in the master classes, from bucket analysis we can assess overextended condition in two ways. One is when the percentage of stocks in the upper extreme bucket goes to 30-40% level, and it was far above that on Friday at 50%. Another way we can assess overheated market is when the extreme uppermost bucket jumps by 10% or more, and it jumped by 15% on Friday. So from both the angles I had reasons to be cautious, and I closed all my positions that I started buying from Wednesday. Now, one interesting, I'll point out few interesting things that you could uncover from this Q analysis. Not only from QH, from different angles, not only from bucket analysis, but let me share one first. Notice that there was a huge jump in percentage of stocks in the uppermost bucket. So many stocks went above upper Bollinger Band. However, the percentage of stocks above mid Bollinger Band did not change from Thursday to Friday. Again, the percentage of stocks above mid Bollinger Band did not change from Thursday to Friday. However, percentage of stocks above upper Bollinger Band jumped by more than 15%. What did it mean? It meant that extended stocks became more extended, and it is difficult to buy those stocks. Already they were extended and they became more extended. Who wants to buy swing trade long positions when stocks are above upper Bollinger Band? Not many, not me certainly. That those are not going to give low risk buy points usually. So extended stocks became extended, and I made a well informed decision to close my long positions that I took earlier, all with a profit. Now I mentioned I did take few more long positions near the close of the day. Let me see if I have time to get back to them, but I will point to some more interesting facts. from Q edge, from sector level analysis. But before that, let me go to the market level again, looking at the finder balance between bullish and bearish technical signals. Weekly period first. 87% of all signals bullish, 94%. Almost 100%, you may say, 94%. Trend continuation signals are bullish, strength signals 85%, and even reversal signals 70%. This is getting overbought. If this situation happened at market low, then I would think that bullish momentum is just starting. And in fact, that is exactly what I mentioned couple of weeks ago when I turned bullish first. I think it started becoming very bullish across all the categories. I don't remember weekly or daily. However, I shared at that time, because market was very oversold, the bullishness showed that bulls are stepping into the market. But now market is already up for a couple of weeks. I already could take series of swing trades, long direction, closed most with profit. And now when I see so many cyan colors in the weekly period, now I'm thinking it is getting overbought. What about daily picture? Friday was bullish across all categories. Okay, let me say, not across all, across three categories. Reversals were mixed. Overall though, it was a bullish day. So we have signs of extended nature from many angles, but no bearish signal yet, neither from market breadth nor from market ETFs and nor from technical breadth. But it is certainly getting extended. Now let me share some more interesting analysis. Let's go back to Q edge. We saw that large cap stocks did well. And let me look at some of the stocks that did well. Amazon did well. And I have a group of traders. I communicate with them from time to time when I want to. I shared a few charts with them on Thursday that looked bullish to me and that gave valid Q buy setups. Amazon was one of them. It gave a bullish flow, higher low and higher high. The weekly was already bullish. In fact, weekly backdrop turned bullish here itself. Weekly was bullish all along for many weeks. Therefore, on Thursday, we had a trend following long setup. However, Friday had earnings, so we would not buy Amazon using stocks. We could trade it using short put vertical. Then the delta and the volatility move both would be in our favor if it moved in our direction, and it did. And you could book a very generous profit in Amazon using the flow trend following long setup of Thursday. Now Amazon went up heavily. Was their result excellent? Probably not. Was their outlook better? Probably yes. Now if that is so, that tends to show, if that storyline is true, that tends to show that consumer discretionary as a sector should have done better. If that storyline, and I heard that storyline from several people, from several media pundits, that Amazon gapped up, even if their earnings was good or not, doesn't matter, their outlook must be good, and it gapped up hugely. By the way, it did display a bearish indecision at the top on Friday. So at Friday's close, I was not going to buy Amazon. On Thursday, I could take a long position using options where my risk is well defined. But on Friday, it has a bearish indecision at the top. Now, coming back to that storyline that Amazon went up because the outlook for consumer spending is good. Consumer discretionary products uh, is going to sell better. If that is true, we should be able to see that from sector scorecard in Q Edge. And that is how when I hear or see some storyline, I like to validate with objective data. Let's look at one-day sector performance. Where is consumer discretionary? Here. In fact, of the sectors that went up on Friday, consumer discretionary was the worst performer. So I did not have any reason to believe in that storyline that consumer spending was overall seen bullishly on Friday. If so, then consumer discretionary would not be the worst performer among the ones that went up. Which ones came down? Consumer staples, communication services, healthcare. These three sectors came down. Healthcare, you may say unchanged. Let's say healthcare is unchanged practically. So communication services, consumer staples came down. Those are defensive sectors. So overall the market was bullish. Defensive sectors came down. Consumer discretionary went up, but it was the worst performer. So it did not validate the storyline that Amazon went up because the outlook is very bright. That was another reason I was not going to buy Amazon on Friday. On Thursday, I could buy it using options. On Friday, I could book the profit. Now, what did very well on Friday? Energy and industrials. Several energy stocks announced their earnings, blowout earnings, and they went up heavily. Let's look at some of them. American energy giants, Exxon Mobil. Let's look at its fundamental scorecard using Q Vital. And while it is getting data, let's look at its charts. Exxon Mobil. Excellent earnings, gapped up and then continued to go up. If you notice the stock at the open using Q Finder, that is real-time scanner, you could actually take a gap long day trade on Friday. Now it is already above upper boundary extended. I'm not going to buy it at the close of Friday, but it did go up sharply and looking bullish, far above recent swing low. I think Chevron also announced earnings on Friday, and again it gapped up and continued to go up. You could take a gap long day trade on Friday. I would not try to buy it at the close of Friday because it is far above recent swing low. But both are looking bullish. That led me to look at some other energy stocks whose earnings may not be over yet. And I think, okay, I'll come to that, but let's look at ExxonMobil's fundamentals as per Q scorecard. Medium valuation, fantastic earnings growth, accelerating earnings growth, fantastic revenue growth, accelerating revenue growth. And just now we saw in the chart, it was not near price extreme low. It's already at a high level, but funds are still accumulating. 79% of peer stocks were up on Friday. It went up heavily. Now I found another stock. I think it's peer stock of ExxonMobil. We'll check its earnings date. Earnings date may be coming. It's in the same industry. Yes, earnings date is coming. You see it's in red color on 2nd August. Valuation score not good, however, extremely high earnings growth, year on year quarterly earnings growth, and rapidly accelerating earnings growth, high revenue growth, funds are accumulating and insiders are buying. These two were true for Exxon Mobil also. Has a short squeeze potential, great earnings quality. Exxon Mobil also had great earnings quality if you remember looking at that. So this is also looking fundamentally very strong. What is the stock? OXY, Occidental Petroleum. And now let's look at its chart. Weekly backdrop bullish, daily has swing low, higher high, and a bullish flow. Flow trend following long setup on Friday. So this was one of the stocks I mentioned. I entered long positions, a few of them at the close again, and Occidental was one of them. This was a trend following long. I will share probably one or two more possible long ideas, but before that, let's look at fuel cell that I shared last week. And I mentioned I took a short trade. Let's look at its fundamentals again. F cell. Now I shared the short idea on this day. If I look at the history chart, it had a breakdown on this day. That was Friday 1 week ago. Not this Friday, the previous Friday. It had a very nice breakdown with bearish flow color, and I took a short trade at that time. And I publicly mentioned it. How did I manage it? Let's look at it. Go back to the weekly daily. It came down somewhat. I had a small profit, and then I noticed on this day, that is Wednesday, it displayed a bull release signal near the watermark support. The trend line support was not there at that time. The green trend line was not there, but the watermark support was there. And another reason why I exited is I followed Q guidelines. The earnings was the very next day. Was it earnings? Let me check. In any case, on this day, I exited the short trade, and that was good. Next day, it gapped up, it pulled down again. But let's look at its fundamentals again. Yes, earnings is over. So I think the next earnings is in September. So I think this gap up was due to earnings, and if I am holding a position, I always remember to take notice of their earnings. If it is a stock position, I always exit. If it is a vertical options position, then I may continue to hold it. If it is naked options, I don't like to hold it across earnings. So that is how I closed F sell position with very small profit, but that's fine. And I exited it because the earnings was the very next day. Now it has no trade setup. Now another stock that I shared on my website, and let's go to the website now. It's good to review the stocks and how they played out. And this was an IT company, huge Indian IT company. They are listed in India market. They are also listed in USA market. In this case, I traded in the USA market. I shared it with few India traders. They might have traded it in India market also. That was Infosys or Infi. And see how I analyzed the stock. And this was analyzing the US listed code Infi, INFY. On this day, I saw Infosys had a box long setup as well as a trend following, not exactly trend following, but you may say flow long setup. It had a gap up move. Price went up by 4.5% with bullish pressure. And all this I read from Q Finder on Metastock, and you could also see those same signals in Q Finder on TradeStation. Flow long setup, box sideways market long setup went up by 4.5% with bullish pressure. Also had bullish U-turn, and price was at extreme low, pendulum low. So that was a lucrative point to buy. In terms of industry, the industry was among the top 20% in terms of strength as well as acceleration. Industry was up significantly, almost 2%. So we had every reason to buy in terms of industry as well. Fundamentally, funds were accumulating, valuation was medium, earnings was not that great. Not very weak, but certainly it was coming down. But the industry was very strong. 88% of peer stocks were up and funds were accumulating. Has a small dividend, 2.2%. So looking at the technical charts, I decided to take a long position. In weekly, it was creating a nice base. When I shared it, we had a bullish shape, bullish color in weekly. And notice the same sequence of indicators that I use many times. Jump thrust low at price extreme low. So it was jumping down when it was already at low price level, and then big move up 3. So big players stepped in. That was on this day. It retested the low 2 more times but could not breach it because we have a trend line support. We always have higher lows here. And right on the day I shared it, it had a bullish candle with bullish flow, and I decided to share it, and I also took a long trade in this Infi. Let's see how Infi played out. It went straight up, and remember I mentioned earlier that starting from Wednesday I started buying stocks again. Infi was one of them, and I shared it publicly. I like to discuss only trades that I share publicly. Otherwise, I could share hundreds of trades that made profit. But this is again a trade that I shared publicly before knowing the results. Gave a nice profit. In this case, I personally traded it with naked short put, and I booked the profit on Friday around 2 p.m. That's when I tweeted that I am closing my trades that I took on Wednesday. Now we have a few more minutes, maybe 1 more minute. Let me share another possible buy idea that you could consider at the close on Friday. One is also another one I shared already in energy sector, Occidental, and another one is Halliburton. HAL. Next earnings is 17th October, so earnings seems to be over. Great earnings quality, short squeeze potential, funds are accumulating, high earnings growth, medium valuation. So we may buy it as a high growth stock, high revenue growth also. 90% of peer stocks went up on Friday. If we wanted to look up its industry score from Keywedge, we can do that with a single click. Among the top 20% in terms of score, among the top 20% in terms of acceleration, the industry itself went up by more than 4%. Huge jump. Every reason to buy in the industry. Great fundamentals. Let's look up its technical charts with a single click. It will open the chart. Halliburton. Let's look at it using weekly, daily. Everything is in the custom menu. Now I mentioned many times one pattern I like a lot is when a stock comes to long-term weekly trend line support. Automatically drawn smart trend lines, and we have three of them coming from far away. Price dropped sharply, stopped right at those three trend line supports in weekly and went up this week, displaying a bull release signal. Daily of course has the trend line support and it is about to break above the trend line resistance, and that is the pattern I like. At weekly trend line support, we have three of them, breaking daily trend line resistance. It broke with a bullish flow, though the break is not decisive enough. If you see the price is going up next week, then you may buy it. And I did take a small position on Friday. I may add to it next week if it continues to go up. Why I did not mind buying a small position is because if it comes down, the stop is very narrow. So I'm never unhappy about taking a loss so long as the loss is small. And based on my previous experience, this pattern works very well. And also this stock is fundamentally very strong. Industry is strong and I am buying it at a low risk point. So Halliburton is one stock. I took a long position, smaller position near the close. Let me share another stock that is not in energy sector that you could consider buying at Friday's close. That is, I think coals, KSS. Let's look at coals technical charts. Look at it using weekly, daily. Remember the Infosys chart when I shared it, not after it went up. When I shared it, I showed that Infosys was creating a nice base in weekly. Infi. Of course, Infi was in cyan color. Coals, KSS, is not in cyan color, but it is looking like creating a base similar to Infosys. We have two bullish indecision at the bottom. After few waves of sharp drop, it is stabilizing. Backdrop color has changed to yellow from magenta, from bearish to neutral, and we have these two bullish indecision at the bottom. As I always mention, one is important. When we have multiple of them together, it's even more important. And I have a breakout in daily with a bullish flow shown by the tick. What happened before that? It hit jump thrust low. It was jumping down heavily when already at price extreme low. So a recovery was likely, and now I have a breakout setup. So I in fact took a small position in coals also. All these were using stocks: coals, Occidental Petroleum, and Halliburton. You could find probably other buying ideas also on Friday at the close. Now notice the difference between these stocks I selected and Infi. Infi I bought few days ago and I closed the trade on Friday, and later on near the close I took some trades, but these all gave a low risk entry point. Infi at Friday's close did not have any low risk entry point, but these three stocks had. In this way, you can find some stocks in strong industries even if the market is extended. Now, let's look at coals from other angles. Of course, I would not, as you know already, if you are watching this video or videos regularly, I would not buy only based on technicals, isn't it? Why would I do that? Because I have all the other tools to find how the fundamentals are. Now, coals has fantastic valuation, undervalued, in fact, the best possible score, great earnings quality, and a short squeeze potential. Funds are neutral, and I noticed the dividend yield 6.8%. That itself is good enough reason to buy. So you could buy calls as a dividend player, and when it is selected as a dividend player, you may note the earnings quality. Is it robust? Yes. In this case, earnings quality is robust, so we may rely more confidently on the dividend yield going forward, and from dividend yield perspective also you could buy, and it is giving a valid breakout long setup. 69% of peer stocks went up. How is the relative score of the industry? It is in fact among the top 20% of all industries. The industry went up by 2.78%. So from industry angle also we could buy. Once again we found a 360 degrees buy candidate, in this case a breakout candidate at extremely low price level with a nice dividend yield. That's how I find my trades, aligning many forces, and over time they work out. If you are following this analysis and how I share live ideas before knowing the results, you would know they work out very well. And that's why I say there is no reason not to trade profitably if we have a robust systems and we are applying the systems with discipline and following risk management. That's all for today's session. Thanks a lot for joining. I look forward to seeing you in my next session. The public session will be next weekend, same market review. Have a great weekend and trade profitably. Thank you.